Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking S&P futures. S&P started up the day in a pretty good uptrend, being up as many as 11 points at one point off of a note by Morgan Stanley, the well-known global financial firm that I'm sure you've heard of, calling for 15% upside in the next 12 months for the S&P. There was a lot of mocking of that note simply based off of the time frame and the fact that financials are not leading right now and energy is not likely to continue to lead once some of the speculation is over in crude oil, dragging the energy sector up a little bit higher today. Goldman Sachs is up a little bit higher today. But other than that, we've got a normal market with lower volumes and kind of sideways, finishing up near unchanged. Actually went negative later in the day as talk came out that Donald Trump was actually rehashing his entire fiscal policy. Now, there's some political tension that we probably need to talk about. Politics is definitely dominating the movement of the equities right now. There's the U.S. versus basically everybody, and I just mentioned Donald Trump's plans to rewrite his entire tax plan. So that kind of takes off the table the tax plan that he ran on and starts the construction of a whole new plan. And then you've got the French election, which the most recent poll of the upcoming French election, remember the first runoff is April 23rd, the most recent poll put in basically a four-way tie. So it's entirely possible that when the May election comes, which is the two winners of the April runoff running against each other, it could actually be a hardline communist versus a hard right-wing nationalist. That's actually possible if you believe the latest polls, which is now showing it in basically a four-way tie. Marie Le Pen is the conservative, the nationalist, and Macron, whose first name escapes me right now, was the centrist that people were hoping the final election was going to be against. Now that may be changing given the last poll. We've also got geopolitical tension, and this is the most worrisome thing for the market in the short term as we approach earnings. You've got the U.S. standing off with Russia and standing off with Syria by default, where the attacks on Syria kind of ruffled Russia's feathers. Russia was said to be moving a warship, not necessarily warships, but a warship toward the Persian Gulf. You've also got what looked like a fairly successful meeting with President Xi Jinping of China, but now China has amassed 150,000 troops on the border of North Korea and supposedly was moving a warship in that direction as well. So we've got a lot of political tension and geopolitical tension going on that could really derail any market rally unless earnings come out really, really strong. So right now it seems like the market is just biding its time to see what happens as the earnings season begins next week. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.